We need to go over the really quick risk disclaimer, which trading or investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance in making independent investment decisions. ValueCharts.com has taken reasonable measures to ensure the accuracy of the information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage that may result directly or indirectly from such content or from an inability to access such information or a delay and or failure of the transmission or receipt of any instruction or notification in connection therewith. Any past performance results are shown for illustration and example only, are hypothetical, and as such have many inherent limitations. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. And then along those same lines, we're required to show you CFTC Rule 4.41, basically just saying, look, we can show you a million things from the past. There's no guarantee it's going to happen again in the future. That being said, we trade these strategies in front of hundreds of people every day, and people are using real money. So it works. We believe they work, and that's why we're going to show them to you. Now, before we get started, here's a couple questions you're going to ask. This is great, but how do I get in? Don't worry. I broke the webinar down into two sections. First one is understanding and reading trend direction and understanding the definition of a trend. And then the second section is how to actually enter and manage a trade once you're in the trend. Okay, so section 1, you're going to learn the trend. Section 2, you'll learn how to get in and how to actually place the trades. Another question you're going to ask is this being recorded? Yes, it is being recorded. And the recording should be sent out to everybody that attends here today. It should also be made available to everybody in the future. Lastly, you're going to be asking, how long will the event be? Somebody's sitting there asking it right now. It's supposed to be about an hour long. We'll see. It depends on questions. I'll stay a little bit longer if people have a lot of questions. So it just depends on you guys. At the end of the presentation as well, what we can do is we can go pull up TradeStation and we can look at some live charts, some real examples, because it's really easy to say, look, it happened here and here and here, but it's really hard to say. People always doubt me when I say you can do it while it's actually unfolding. Easy to go back in the past and look at it, but it's hard to go into the future and see it. So we'll go talk about that as well. Then lastly, if you ever have any questions, send them in at any time with your GoToWebinar menu. I will answer them at the end of each section. I also have a Q&A portion at the end of each section that we talk about today. But send your question in as we go. That way, if it's something that's pertinent to what we are actually discussing at the time, I can actually pull it up and answer that question while we're on the screen that I'm looking at. All right, so that being said, what is naked trading and how do you know market direction? And no, naked trading is not just a pun because it's Valentine's Day. Naked trading is referring to trading based on price action alone. So you don't have to have all the crazy indicators that you see out there. You don't have to have that holy grail indicator that everybody's talking about or the next best thing. Now, I'm not here to tell you that indicators are bad. I think indicators make trading much easier. They assist you with identifying things that you otherwise wouldn't be able to see. That's what they're there for. They're there to help you. However, I do see a lot of people, a lot of times, having indicators all over their charts, so much to the extent that you cannot even read the price action behind the chart. You can't even see where the market's at because they have so many different lines and things drawn on their chart. So when you look at your chart and you go, okay, I have no idea where this market's going because this indicator's saying long, this one's saying short, and this one's saying don't touch it, and this one's saying it's going backwards. Well, then you have a problem. Again, the indicators are there to help you, not to hinder your trading, okay? Now, with naked trading, we're going back to the basics. Most indicators today are based on price action. So we're going back and we're going to start looking at the price action. What's the actual market doing? What's the market telling us? What are the price moves doing? And telling us. Sorry, someone's asking if I'm talking yet. So we're going back and going back to the bare bones, the basics of reading a chart. All right. Now, every trend is going to have one thing in common. Every uptrend, definition of an uptrend is higher highs and higher lows. Definition of a downtrend is lower highs and lower lows. You cannot have a trend without one or the other. Now, occasionally you'll have a market that just goes straight to the moon or straight through the floor, and that's not really a trend. It's just a huge move in one direction or another. But a trend is going like this. Okay, higher highs, higher lows. doesn't go straight up, doesn't go straight down, or downtrend is going to be lower highs and lower lows like this on the way down. Okay, so once you understand what the definition of a trend is, and you understand that, okay, if a market's putting in higher highs and higher lows, or lower highs and lower lows, it's either trending up or trending down, then we can start to understand, okay, now we know the overall direction of the market. Now, when we are looking at the overall direction of the market, once we understand, okay, overall this market's heading higher or lower, then we can start trying to find precision entries into that market in the direction of the trend, so we can catch a much bigger move. You can also identify when a market's reversing or entering into consolidation, because if it's no longer putting in higher highs and higher lows, it's either reversing or going into consolidation. No longer putting in lower highs and lower lows, it's either reversing or going into consolidation. Okay, now you can apply this logic, this strategy, reading price action, end of day or intraday, either one. If you want to be a swing trader, you want to catch bigger moves, go end of day. If you want to be a day trader, go short term, go 2-3 minute chart, go to a tick chart, something like that. Okay, but you can adjust the time frame according to the type of trader you want to be. Do you want to be a swing trader going for big moves, or do you want to be a short term day trader? If you're having a hard time understanding the trends, okay, one of the easiest things you can do is literally stand up and step back from your computer, or compress your bar intervals so they're much tighter together, so you can see the big moves. Overall, is the market putting in higher highs and higher lows, or is it putting in lower highs and lower lows? A lot of times I find traders, they get caught up on the short-term stuff. They get caught up in the noise, because although the market does go like this, higher highs and higher lows, it really goes like this. So it puts in higher highs and higher lows, but it's not really that smooth. Okay, so if you're getting caught up on this small stuff, you're going to be sitting here going, oh no, we're trending down, oh no, we're trending up, oh no, we're trending down, and you're going to miss the big picture that the whole entire market's going up. All right, so don't get caught up on the small stuff. If you find yourself doing that, one of the easiest things you can do is compress the bar interval, or literally stand up and step back from your computer and look at the overall direction of the market. A lot of times, and the other thing is, don't worry about finding the top or the bottom. Okay, we're not going for the top or the bottom with this strategy. We're going for that middle 80%. Well, if you can take out 80% of every move a market makes, you're doing pretty darn good. Okay, I don't think you'll be complaining. So don't worry about getting out the very top or getting out the very bottom. There are ways of doing that with divergences or candlestick reversals, things like that. However, that's not what we're talking about today. We are concentrating on that middle 80%, where the 80% of the money is at. Okay, so we're trying to find the trends to be able to stay in. Once you enter into this type of trend, okay, once you get into a trade, if you're going long in an uptrend or short in a downtrend, you can manage your stop placement for your exit by trailing it below the most recent higher low or above the most recent lower high. Okay, for example, let's say we went long right down here. All right, and then this market goes up and down and then up and then down and then up and then down and up and then down and up and then down. All right, well, since the definition of an uptrend is higher highs and higher lows, every time we put in a new higher low, we trail our stop. And then we'll trail our stop here. Then we'll trail our stop here. And then we'll trail our stop here. And then we'll get stopped out right over here, because we're no longer putting in higher lows. So that way you stay in the trade as long as the trend continues. Now you're looking at the lows and the highs according to the time frame you're analyzing. Okay, so you're not going, I'm looking at a 2-minute chart, but then I'm putting my stop below the daily swing highs and swing lows. No, you're looking at a 2-minute chart, you're trading a 2-minute trend. You're looking at a daily trend, you're trading a daily trend. All right, so that by doing this, by trailing our stop behind the most recent low or high, where you can stay in a move that instead of getting in and getting out right over here, because we see it start pulling back, we stay in it and we make a $20,000, $30,000, $40,000 contract trade if you're swing trading. I'll show you an example of that here, because you would have just been exiting crude oil shorts from months ago if you had been following this strategy. So this will guarantee you stay in as long as the trend continues your direction. Because remember, if we stop putting in higher lows, we're either consolidating or reversing. Well, if we're consolidating or reversing, we're no longer trending, and we don't want to be in the trade anymore. If a previous high or low is broken, then the market's entering consolidation or reversing, and it's time to get out. So here's an example of crude oil. Okay, this is just a daily crude oil chart. daily crude oil. All right, here's a low, here's a high, here's a higher low, a higher high, a higher low, a higher high, a higher low, a higher high. So what's this? Because we have higher lows, higher highs, higher lows, higher high, higher low, etc. This is an uptrend. What happens right over here? When we break the previous swing low, we no longer have an uptrend, but we're not in a downtrend yet. We're now in consolidation. Okay, we're either consolidating or reversing. So then we put in a lower low. So now we have a lower low here, and then we bounce. So we bounce back up, and as of about this point right here, when we start rolling back over, then we say, okay, now we have a lower high, which means a lower low plus a lower high equals a downtrend. So now we're in a downtrend. Lower lows, lower highs, lower lows, higher highs, which means consolidation or reversal. But then we put in a new lower low. It does not put in a higher low. So then we have lower lows, lower highs, continue with the downtrend. Lower lows, lower highs, all the way down. All right. And if you had been using this strategy, you would have just been getting out down at around 50, I believe is what it was, or 49.50 or something. So you would have been exiting because we just put in a higher daily high. Makes sense? Now, going forward, I'm going to be putting lines on the chart like this so you can see the highs and the lows I'm talking about, make it a little bit easier on you so I don't have to sit there and mark every single one for you. But the big white line going forward through the rest of the webinar today is going to be the major swings. And again, we're not looking at the little tiny bounces, okay? We're not worried about these right now. We'll talk about them in a minute. But we're looking at the big swings. Overall, we put in higher highs, higher lows. So higher high, higher low, all the way up, and then lower low, lower high, lower low, lower high, lower low, higher high, lower low, lower high, lower low, lower high, all the way down. Okay? Here's another example. This is Tesla. On a daily price chart. And right here, okay, so we have a high, and then a low, and then a lower high, and a lower low. What does that mean? That means it's a downtrend. And then here's another lower high. Well, then right here, we put in a higher low. So now we're going, okay, put in a higher low because now we're no longer in a downtrend. We are now in consolidation. And then when we break this high here, so as of this point right here, we're now in an uptrend because we have a higher low. And now, as of breaking that previous swing high, we have a higher high. So now we're in an uptrend. Then you put in higher high, higher low, higher high, higher low, higher high. Okay, now what happens? We come down. As of this point, we're no longer in an uptrend. We're now in consolidation or reversing. So this would be a lower low. Comes all the way down here, bounces. And then as of this gap down, you would have said, okay, now we have a lower high to confirm with our lower low to give us a downtrend. And we have a lower low, and then a lower high, and then a lower low. Yes, I know this is a very large swing. Okay, if you are a trend follower, you have to be okay with allowing the market to pull back against you as long as you're staying in the trend, because we're not worried about the small stuff. We're looking for the much larger moves, right? So you have to be okay with being long from here, letting it come all the way back down, and then go all the way back up because it stayed above the higher low. Now, I personally do not do that. I'm not the type of trader that goes for these huge mega trends. Okay, I go for short-term trends. If you're day trading, which is what I typically am doing, then when you're trading like this, day trading, your trend is going to last for $500, $600, $700 a contract, and then you get out. Okay, which means these retracements, these drawdowns, peak to valley drawdowns, are only $100, $200 at the most, which I'm okay with. I wouldn't be okay with giving back $5,000, $6,000, $7,000. All right, but different strokes for different folks. Some people like using swing trade strategies for the much larger trends, and there's nothing wrong with that at all. Again, you can apply the strategy to whatever time frame you want according to the type of trader you want to be. So let's take a look. This is the British pound US dollar. I've tried to incorporate some different charts in here using Forex, futures, equities. It works for any market, this type of strategy. Again, it's just the basics of technical analysis. It's the basics, the fundamentals of learning how to trade. So this is the British pound US dollar, also known as the cable. This is on a daily price chart. And yes, I have intraday charts as well coming up here, so you can see day trading. But here's a low, here's a high, a higher low, a higher high, a higher low, a higher high. So this over here is an uptrend. As of this point right here, we now have a lower low. And then as of this point right here, we have a lower high. And now we have a downtrend. We put in a lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. Now, I know I've been talking about you only want to look at the big swings, and you're gonna go, well, it's not a very big swing, that's a pretty small bounce, it's only a week. Well, the reason you count that type of swing, okay, is because we just ran for 2 months straight through the floor without barely bouncing more than a day or two, okay? So when the market is running like this, you need to count the small bounce, because we don't want to have to wait for this market to come all the way down here and then all the way back up there to confirm a downtrend. Make sense? So when a market runs extremely quickly, then you can use a smaller bounce. But if the market is just normal cycles, high and low, then you do not need to be looking at the small stuff. So here's another example. This is gold. This is on a 30-minute chart. So here's a low, and here's a high. And then here's a higher low, and here's a lower high. All right, remember the definition of an uptrend is higher highs and higher lows. And the definition of a downtrend is lower highs and lower lows. So what does this tell us? We have consolidation, because we are compressing. Price action is compressing, it's getting smaller, narrower. So what do? Well, consolidation is a great thing for us, because that's how we can time some entries for breakouts. How do we do that? We draw a trend line, going across the tops and across the bottoms, and now we have a pennant pattern. Where's our breakout? Well, as of right over here, we are breaking below the lower low. So now we have a lower low, and then spike up, lower high, lower low, lower high, higher low. Okay, so as of here, we put in a higher low. Now, it's not reverse trend until it breaks the previous swing high. So what are we going to do? We'll draw a trend line here, looking for consolidation breakout. However, it then reverses and breaks the previous swing high. So as of this point, we now have a higher low and a higher high. So we have a higher low and a higher high. What does that mean? It means it's an uptrend. So we are now in an uptrend. And then you have a higher high and a higher low and a higher high. Okay? Makes sense. Here's another example. This is Apple. This is on a 5-minute chart. So here's a low, here's a high, here's a higher low, and a lower high. What do? When we have compression like that, when we have consolidation, we then draw our trend lines and look for the breakout. There's our breakout. And now we have a lower low and a lower high. And then a lower low, and a lower high, a higher low, lower high. What do? Draw our trend line for consolidation. Where's our entry on the breakout? Here's continuation, lower low, lower high, lower low, lower high, lower low, lower high, higher low. What do? Draw our trend line for the breakout. It never broke out. Instead, went up and put in a higher high. So now we have a higher low plus a higher high, which now means we are in an uptrend. And they have another higher low, another higher high, another higher low, another higher high. Pretty simple. Okay, really easy to read, really easy to see. So, any questions on understanding just the direction of a market, understanding the trend, the definition of an uptrend, and definition of a downtrend? Remember, uptrend is higher highs, higher lows. Downtrend is lower highs, lower lows. That is the definition. It will always be there. Okay, you cannot have one without the other. Paul, yeah, not right now. What time frame charts do you use for your day trading buys and sells? Liz, normally I'm looking at a 500 or a 1000 tick chart. So I like using tick charts. Would you be more conservative when drawing a horizontal breakout line? So I think what you're talking about, correct me if I'm wrong, but you're saying, wouldn't it be more conservative to, instead of drawing a line like this, draw a line like this and get short on the break of the lowest point? The problem with doing this is if you are selling on the break of the lowest point, you're now selling at the lowest point this market's ever gone. So you are selling at the low. That's the definition of selling at the low. You can do that if it's a small bounce. So for something like this, where this trend line, let me redraw that, like that trend line there, and then the support level is right here, and there's just a little different distance, it's better to wait for the break of the support. However, for something like this, where there's a pretty big distance, you're now getting short at the low, and you run the chance of this market just putting in a lower low and then bouncing back up and putting in a lower high and stopping you out. And it would still continue in the direction of the trend. So you're getting in a little bit late. TJ, we're working on one that looks like that, yes. My question, I already answered it. Could you go over consolidation pattern? Consolidation, okay, remember, the definition of an uptrend is higher highs and higher lows. Definition of a downtrend is lower highs and lower lows. So by default, if you're not putting in higher highs and higher lows, or lower highs and lower lows, then you're consolidating or reversing. So anything outside of higher highs and higher lows, or lower highs and lower lows, is consolidation. How many times can I say higher high and higher low and lower high and lower low? Can you apply options on lower time frames for day trading stocks? Yeah, you can absolutely do directional plays with weeklies. Does it have to be? Yeah, Wolfgang, you can use whatever tick chart you want to use. Again, adjust the time frame that you're looking at, adjust the chart depending on the length of time you want to be in a trade. Remember, the larger the time frame, the bigger the move, but also the bigger the risk. The shorter the time frame, the smaller the move, but also smaller amount of risk. Having attended a few of your webinars, workshops, you don't seem to use volume. Is there a reason for that? No, not really, Bola. I look at volume every once in a while, but I don't ever base trades purely on volume. Yes, you can use options on shorter time frames for day trading. Just use weeklies and do directional plays on weeklies. Just plain vanilla puts or calls if you want. How do you filter or avoid false signals? We'll talk about that later. Okay, so if there's no more questions about understanding the overall direction of a trend, excuse me, then we'll go ahead and jump in with what's called trading a micro trend, or what I'm always calling a micro trend, which if you follow me on Twitter or something, you always hear me saying micro trend in this market. Well, this is what we're talking about. A micro trend is a small trend within the context of a larger trend. Okay, now that you know how to identify what a trend is, you're going to start to see micro trends or miniature uptrends within the context of a major downtrend, or a miniature downtrend within the context of a major uptrend. These micro trends oftentimes give us great entry opportunities to jump back in when a major trend resumes its original direction. So remember, a market is not this smooth. It doesn't just go up and down and up and down. It goes up and down and up and down like this, okay? Well, a lot of times what you'll see is, even though a market's trending higher highs and higher lows, but we come up here and then we do something like this. Okay? Well, this was the last major swing low way down here. So in order to reverse the entire trend, the major trend, you have to break the major swing low. But here we have lower low, lower high, lower lows. Okay? So what does that mean? That's a micro trend. What do we do with a micro trend? We draw a trend line across the tops. All right? If it's a micro downtrend, the trend line goes across the tops, and the trend line has to be angled down. Okay? So anytime you're looking to go long, the trend line has to be across the tops and has to be angled down. Anytime you're looking to go short, the trend line has to be across the bottoms and it has to be angled up. Okay, so if you're going short, the trend line needs to be angled up and it has to be across the bottoms. If you're going long, the trend line needs to be angled down and has to go across the tops. When you see a short-term series of higher low, higher high, within the context of a major downtrend, draw a trend line connecting the lows. When the trend line is broken, you enter the short. When you see a short-term series of lower high, lower lows within the context of a major uptrend, draw a trend line connecting the highs. And when the trend line is broken, you enter long. All right. So from here on out, we're adding something to the way we have this set up. The white is the major trend. White lines are the major trend, the major swing highs and lows. The blue is the micro trend. And the yellow is the trend line that you use to enter. So this is that crude oil example that we looked at earlier. This is on that daily chart. So major swings, again, we were putting in lower highs, lower lows. Remember, as of this point right here, this is where we entered that downtrend, right? So now that we're in a downtrend, we're looking to enter into a downtrend with minimal risk. How do we do that? Well, we wait for the micro trend. So here's a high, here's a low, here's a high, here's a low. So this is a higher low and a higher high, but the major swing lows and highs are still overall down, right? Major trend is still down because we have not put in a major swing high and a major swing low yet. So what do? We draw an upward angled trend line going across the lows, connecting the lows, and we enter on the break. Where does our stop go? Initial stop. Ideally, we want to put it above the previous swing high. If that's too far, we put it above the previous bar's high. Okay. But you see here, what we are not doing, we are not saying a micro trend is not, this right here is not a micro trend. Okay. That's not a micro trend. This is a micro trend because we have a swing high and a swing low and a swing high. Okay, so we're looking at these bounces. We're not looking at connecting bars right next to each other going straight up. Okay, yes, this theory absolutely 100% works intraday time frames. One of my favorite ways to day trade. Okay, so then we break out, we sell short, we continue lower. Here's a low, here's a high, here's a higher low, here's a lower high. But we have a higher low within the context of a major downtrend. So we draw our upward angled trend line going across the lows. All right, where do we enter? We sell short right here. Stop is either here or above the previous bar's high, and then we catch the continuation. Same thing here. Here's a low, here's a high, here's a higher low, here's a higher high. So micro uptrend within the context of major downtrend. Draw your trend line up and across the lows, where you enter right here. Where's your stop? Previous bar's high or the highest high. Here's your continuation. Yeah, every single one of these micro trends I'm pointing out right now, we called out in the trading room as crude oil was coming down. Okay, so you would have had the opportunity to enter every single one of these trades for those of you that were in the trading room at the time. So yeah, it's easy to go back and look at them in the past, but we call them out in the future. And again, we'll pull up TradeStation here at the end of today and look at some markets and see what they're doing. So here's this Apple. This is Apple example. AAPL. This is on that 5-minute chart. So remember, we're swinging down. We broke out up here, right? And we're coming down. And then we have a low, and then a high, and then a higher low, and a lower high. So we draw our upward angled trend line going across the lows. Where do we enter short? Right here. Where's our stop? Right there. And then remember, we put in another higher low here, so we can draw a trend line there. We sell on the break, stops at the high or above the previous bar's high, and then we catch the continuation to the downside. Now, when you are trading this, all right, you do not wait unless you're trading a daily price chart. Okay, dailies are a little bit different because it's a larger time frame, but especially intraday, we're not looking to wait for that bar to close above or below the trend line. Why do we not want to do that? Well, if we're waiting for the bar to close, then we didn't sell Apple until way down here. Okay, that's where the close was. The trend line break happened way up here. So by the time we got in, half the move was over. All right, so we sell as soon as we break through by just a few ticks. So as soon as we go through that support resistance by a 4 or 5 ticks or so, far enough that we can say, hey, it's actually through that trend line, then we can jump in. All right, that'll help you by waiting for it to actually go through several ticks. It'll help you from getting caught on false breakouts. All right, down here, here's another example. A low, a high, a higher low, a lower high, going right into the close. And then you draw your upward angled trend line. Now, please do not sell a market if it gaps way down here like that through the trend line, okay? Because now you run the risk of it selling at the absolute low and having this happen in a gap fill, okay? Do not sell on a gap. If the market had gapped to right here, sure. So if it had gapped just below the trend line, okay, you can sell it. But if it gaps way down through a trend line like that, no way in the world would I be selling that, all right? We want to have the ones where we can watch the market. The ideal situation is this right here, where we watch the market run through, we get in, and the same bar that we get in on, it just drops to the floor, okay? That's ideal. If it gaps through just a little bit, okay, that's all right. We can take one that just gaps through a little bit. If it gaps through a lot, do not touch it. I mean, you're talking right here, this is almost a 2% gap. All right, and then remember, we put in a high and a low and a higher high. So now we have a higher low, higher high, uptrend. Right here is our micro downtrend, high, low, lower high, lower low. Draw our downward angled trend line because we're looking to go long. We go long on the break, and we catch the continuation. Make sense? Someone's asking, how do you get out? Well, remember, the first thing we talked about was stop management. Where do your stops go? You trail your stop below, or if you're selling short, so let's say we sold short over here. So we sold right here. Our original stop was here. We trail our stop above each lower high, okay? So stop's here, and then we put in a new lower high here. Then we're gonna move our stop here. Put a new lower high here, move our stop here. Put a new lower high here, move our stop here. Where do we get stopped out? Right there. So there's our exit. So we had an exit right down here. So we had this much risk for this much reward. Not bad. One thing, by the way, and this is just something extra, if you do not take anything else out of today's webinar, make sure you have a good reward risk ratio. Okay, the better the reward risk ratio, the easier it is to become a very profitable trader. All right, if you have a 2-to-1 reward risk ratio, you only have to be correct on your trade. So if you have 2-to-1, you only have to be right 34% of the time to be profitable, okay? You only have to be correct 34% of the time to be profitable. You can almost do that flipping a coin. So if you have 2-to-1 reward risk, you can stay a profitable trader by being correct on your trades 34% of the time. If you have 3-to-1, it's even better. The problem that I find, I do a lot of mentorships and consultations with people, and the problem I find is majority of people have something like a 0.5-to-1 reward risk. What does that mean? Well, in order to be correct, to be profitable with a 0.5-to-1 reward risk ratio, you have to be right something like 78% of the time to be making money. That's a heck of a lot harder than only having to be right 34% of the time. All right. So if you are risking $100, you need to be making at least $200. So if you jump in and your stop is $100 away, you need to be making at least $200 on the trade. That'll make it so much easier on you to be a profitable trader. Okay, remember, when we place a trade, we should have expectations for how that trade plays out. We should have expectations on how far that market's going to move. If we don't think it's going to move that far, if we're risking $100, we only think it's going to move $50, then why are we getting in? There's no need to. Okay. And if you're trend following, when you're trend following, okay, with this type of strategy, you're looking for those trades where you get 50-to-1 reward risk. Okay, so for example, with the crude oil trade, you would have just been exiting with $50,000 a contract worth of profit, roughly, off of a $2,000 contract worth of risk. It's a pretty darn good reward risk ratio. All right, so here's that British pound US dollar again. It's on that daily price chart. Remember, over here we were an uptrend. We already discussed this. This was an uptrend, and then as of this point over here, we're in a downtrend. All right, so all this is heading down. All that's heading up. So here we have a high, a low, a lower high, lower low, lower high, but we never broke through the major swing low that was way down here, remember? So here's your long. Here's your stop, either here or here. Here's your continuation. Okay, we come down, we reverse trend. Here's our micro uptrend. A low, a higher low, a higher high, a higher low, a lower high. Okay, the major swing high, remember, was right back here. So this was, it would have had to have gone all the way up and broken this one before we would say, hey, now we're in an uptrend. All right, but we didn't. Instead, we had an upward angled trend line. We went short on the break. We caught the continuation. Here, same thing. Low, high, higher low, lower high. What do? Draw our upward angled trend line. We go short on the break. We catch the continuation. Make sense? Here's another example. This is the dollar yen. This is on a 15-minute chart. So if we're looking at this, we have a downtrend. Major swings are the white lines. They're putting in lower highs. And then right here we have a low, high, higher low. Consolidation, upward angled trend line, sell on the break. Here, now this one right here is kind of tricky because this I would have considered a trend reversal. All right, I would have considered this a trend reversal. However, you still want to have your trend line drawn because this one put in a pretty big swing high and swing low and swing high. All right, so that would have said, okay, we're now in an uptrend, and we would have been drawing a trend line going here. But as soon as we came back down and broke this low, they were going, hey, something's off. We're back in a downtrend. Okay, and then we put in lows, highs, micro uptrend, trend line, entry, stop is at the high. Then you got to catch the down move. Now, one of the things that I do, okay, one of the things that I do with my trading, since as earlier I told you I don't like staying in for an entire trend, I'm not trying to catch a major trend. What I'll do is if I'm selling right here and my stop is up here and I have this much risk, okay, I'm going to go for a 2 or a 3 to 1 reward risk ratio. If I'm trading 2 contracts, I'll go 2 to 1 for the first contract, 3 to 1 for the second contract. So that means my first exit would be right here. My second exit would have been right here. So then I have this much profit and then this much profit compared to my small risk. And then I would have been out and been happy with it. Same thing would have gone for being short up here or up here. I don't care if it continues to run lower. I'm just looking for a 2 or 3 to 1 reward risk ratio. Now you have to decide for yourself what type of trader you want to be. Do you want to be the trader that goes for the large trend, or do you want to be the trader that goes for a 2 to 1 reward risk ratio? Well, if you're going for 2 to 1 reward risk ratio, then you cannot be upset and don't be disappointed if you see the market continue on $50,000 contract. Okay? Because we're not worried about that. We hit our 2 to 1 target and we're happy. Okay, so don't worry about missing moves. There's always going to be another move. There's always going to be another setup. Don't stress yourself out by going, oh my goodness, I can't believe I closed that trade. I would have made $50,000. No, that doesn't matter. You hit your target. That was a good trade. You followed your rules. All right, I tell everybody, a good trade is not a trade that makes money. A good trade is a trade that follows your rules. A bad trade is not a trade that loses money. A bad trade is a trade that does not follow your rules. The worst thing you can have happen is make money not following your rules, because then you think it's okay to go ahead and break your rules. And breaking rules is one of the ways that you start to lose money. One of the reasons most retail traders are not successful, because they don't follow their rules. There's a reason large hedge funds and everything out there use algorithms to trade. They always follow the rules. An algorithm is going to do what the algorithm says to do, period. All right, so let me answer some questions. No, you do not wait for the bar to close when you enter. You get out by trailing your stop or at a multiple of your reward risk. When do you see on an evolving chart that there is a top or a bottom? Remember, we're not trying to pick a top or a bottom. We're looking for that market to pull all the way back down and reverse. We're going for the middle 80%. Who cares about the tops and the bottoms? Yes, exactly, Wendy. We don't sell on the gap down. How do you manage putting stops in a situation where the candlestick that breaks the trend line comes back and closes above the trend line? Your stops should be above the high of the previous swing. This is all fine if you like to be in and out of the markets all day. Not necessarily, Mark. If you're a swing trader, you would have been, for example, crude oil, you would have been in that trade for 4 months. That's not in and out of the markets all day. That's placing a trade and stepping back and once a month rolling over to the next contract. All you got to do, if you want to be a swing trader, adjust the time frame. If you want to be a day trader, trade intraday. How do you decide what reward risk ratio is? Reward risk ratio is a multiple of whatever you're risking. When you place your entry, you should have your stop placed as well. If you look at your stop and you say, okay, I'm risking $100 on this trade, my target's $200, my target's $300. How do you project what you do not know yet? Target. Well, you can't tell the future, but trading is just a series of if-then statements. If this happens, then we expect this. And you just have to think of all the possible outcomes. It's kind of like chess. As you're playing chess, you're looking at what the other opponent is doing, and you formulate your strategy as you see what they're doing. So you're thinking 2 or 3 steps ahead. Okay, this is how they're setting up their move. This is what they have done. So historically speaking, a person that plays this way is going to end up doing this. Okay, so this is what we're doing. If you want to learn more about this, this is just the tip of the iceberg. Hopefully you learned enough, though, that you can actually take this strategy and use it. I try to make sure that if people come in here and visit, take time out of their weekend to spend with me to learn something, that they actually do learn something. But if you are interested in learning more, you want to learn more about naked trading, valuecharts.com/naked. We have the on-demand replay. That means you can get it and watch it today if you want, and you'll have it until the end of time, and you can keep on watching it. It's only $197, okay? It's normally $400. It's $197, 50% off. All you gotta do is go to valuecharts.com/naked. Don't forget, follow me on Twitter, @TradesWithTom. Again, it's the Naked Trading Workshop. This is what some of the people have been saying that took the actual workshop when we did it live. Again, this is the on-demand version. When we did it live, this is what some of the people have said. Thomas, I want to let you know how much I appreciated your Naked Trading Workshop. Learning how to recognize and apply the foundational principles of raw price action is extremely powerful. The techniques you shared have already made quite an impact on my trading. Many thanks. I want to thank you for putting together a Naked Trading Workshop. After reviewing it several times and testing the concepts the last 2 weeks, I really think it has helped me to simplify entries and give me a clear rule-based approach to eliminate the hesitation I struggled with. This is the 5th workshop of yours I've attended, and I think it's your best work. This is the one I think everyone should start from and build on. Thanks for your help. I've mentioned this to other traders. The Naked Trading Workshop, in my humble opinion, is, as you said, is the basis for everything in trading and should be the first class that any new trader should learn. A must. I see everything more clearly, and I believe my trading has dramatically improved. In a small account, I have more than doubled the amount utilizing that which I learned in your workshop together with your incredible trading room callouts. Once again, thank you for all you do. Again, what is it? The Naked Trading Workshop. Okay, you get it on demand. Again, you'll have it forever. You can watch it as many times as you want. Just go to valuecharts.com/naked. Give me 1 second, I'll send you a link. This is what is covered in the workshop. So what's in it? We talk about high-low and low-high reversals, which is a money strategy. That strategy is so good. We talk about high probability channel breakouts. We talk about trends and micro trends, how to skip false signals. We talk about consolidation patterns. Which way are they going to break? We talk about entering on a second break. When's the market running stops? Why indicators are clouding your judgment, and a whole lot more than just that. So again, the workshop, you can get the replay on demand. You can watch it today if you want. Be ready on Tuesday when the markets open back up. valuecharts.com/naked. Now let me answer some questions, and then we'll pull up TradeStation. Yes, MK, I manually entered those lines, but we are working on an indicator that does that for you. Something we've been testing some different techniques with. To trade weekly options, what time frames can be used for reading price action? You can use a 5-minute chart. You can use a 30-minute chart. Anything intraday. How do you filter a bull flag from a micro trend reversal? A bull flag and a micro trend are completely different. A bull flag is going to be an up move, and then a lower high, and then a break higher. A micro trend is up, and then down, and then up, and then down, and then you draw a trend line. Completely different. You should never get those two confused, because they don't look anything alike. Is there a video of your live trading room? Just get an idea. There's not a video, but you can come in for free. or you can come in for an entire month for $7. Go to valuecharts.com/go if you want to come in for a month. That's $7 for an entire month trial. You get the trading room, you get everything, all the videos, you get the weekly outlook sessions, you get discounts, all that good stuff. Can you look at Friday's crude oil chart? Yeah, we will. All right, so give me 1 second. Let me pull up my trade station, and then we will look at some live charts. You should be able to see crude oil right now on a 1,000 tick chart. This is Friday's price action in crude oil. So here's your first up move. Okay, so trends, higher highs, higher lows, right? Here's lower high, lower lows. There's your trend line break. There's continuation. And then here, all day long, higher lows throughout the entire day. And if you were in the trading room, we said if it broke 53.03, it was a short because it was reversing trend. Well, there's your trend reversal, and you dropped, and lower highs, dropped. Higher highs, but we had not put in a higher low to reverse trend. Instead, we put in a micro uptrend here and a micro uptrend here, and then you broke both of those lines, continued down. And then over here, you put in, there was your previous high, then a low, then a higher high, higher low, higher high, higher low, higher high. Crude's really, really easy market to read, by the way. Larry, sometimes when you are day trading, do you use the time charts to determine the trend and then go to the tick charts? Normally with this strategy, especially, you're looking at one time frame. Okay, if I'm trading 1,000 tick trend, I'm trading 1,000 tick trend. Now, with that 1,000 tick trend, I still want to be aware of previous support and resistance levels on 240s and such, but I'm not going to trade based off 240. I'm trading off 1,000 tick trend. Again, valuecharts.com/naked. It's too cold to trade naked this time of year. Yeah. Bill, this is just a recording from the one you already attended. The workshop's already taken place. This is the on-demand version. Okay, this is just the recording. What's some markets you want to look at? Oh, this is crude oil, by the way. Okay. Remember that trend I was telling you? Remember how we were talking about the micro trends in crude oil? Well, here's the micro trends. Okay. Get rid of that, because that chart ended all the way up at 65, remember? That was right up here is where that chart ended. So you continue to put in lower highs, lower high. This, by the way, if you were in the trading room, we called this out as your break, but that was on 240. You continue to put in lower highs all the way down until right here, and then you would have been exiting because that was when you broke the previous swing high. Now we're potentially looking at a higher low, but the main thing we're watching is this pennant, watching for the breakout, because now you're in consolidation. You get it? So here's a setup you can be following right now. There's your pennant pattern. We just shifted to an uptrend, potentially. We need to see a breakout to the upside to confirm. But remember, the original short was all the way up here, just like that. So the original short would have been selling at 91. Let's say you got it at 91. Stop would have been up at 95. Okay, so you have a pretty decent amount of risk there. You're talking 3,000, 4,000 a contract. All right, so you have 4,000 a contract, or if you put it at the middle here, you would have had 2,000 a contract. And then your exit was down at 51. Okay, so you're talking 40,000 a contract worth of a gain. Not bad. Not bad at all. Thomas, this was my first week in your trading room. I love how you simplify trading and making things easier. Thanks, Jason. Glad to have you with us and glad you're enjoying it. Do I go to the New York Traders Expo? I have before. I've gone a couple times, but I don't know if I'm going this year. So this type of trading teaches us to be mechanical instead of emotional, correct? Yeah, Dan. That's the whole point of a strategy. The whole point of having a system. You want to have a systematic approach to what you're doing. Love your naked trading techniques and rules. Thanks so much for taking time to teach us. You are absolutely welcome, Christine. I am glad you enjoy it. Yes, Merrick, it is. Would you take a look at recent Tesla before and after result announcement? How do we trade it? Sure, let's look at Tesla. This is what I was watching in Tesla. there's your trend line. Okay, we actually had a false break the day before the announcement, which made me think it was going to go up. However, you don't ever trade going into an announcement because that's just a bad idea. Main thing we've been watching though is this major downtrend line here. You can still see you have lower lows and lower highs. Okay, that downtrend has not ended. High, lower highs, lower lows, all the way down, right? So technically you'd be looking for a short here. We've retraced about 50% retracement. Now we're looking for it to move back down again. However, keep in mind you have an inverted head and shoulders potentially. You don't do anything with an inverted head and shoulders until it breaks a neckline, which would be all the way up here. Google is a good example of an inverted head and shoulders that broke the neckline. So here's Google. Here's a neckline, left shoulder, head, right shoulder. There's a neckline, and you'll learn about that in the workshop. We talk about head and shoulders patterns in the workshop. No, Dan, that is the member's price. Please look at Priceline and LinkedIn. There's Priceline. That's what I'm watching. If you were in the trading room, you know we were talking about this consolidation here. And we said we were neutral to bullish unless it broke 990.69. Well, it didn't break 990.69. Instead, it went up and broke out of the consolidation to the upside. And now the target's the trend line, which you're basically there. And then LinkedIn. LinkedIn is still in an uptrend. But what did you have here? Okay, what's this? Well, that's a micro downtrend line, and there was the break. The break happened before the announcement, and then it gapped high. What's this? Here's a micro downtrend. There's a break. There's your gap high. Here's a retest for last kiss and then continuation. What's this? Man, LinkedIn's a good one. Micro downtrend. Micro downtrend. Here's your break. Here's your retest. There's your continuation. This whole time it's been an uptrend because the major swings are still higher highs, higher lows. Trading room, futures trading room is open from 8 a.m. until noon Eastern, unless there's a report. For FOMC, we come back at 2 o'clock. If there's a crop report, we stay till about 9:15 or 12:15 type of thing. Go look at the pound Aussie. Absolutely. Again, don't forget valuecharts.com/naked. Go ahead and go get that workshop. If you want to learn this stuff, it's money, in my opinion. It's a good idea. Higher highs, higher lows, right? Where's your trend line? Well, here's a trend line. There would have been your break. Here's another trend line. There's your trend line. There would have been your break. This, by the way, over here, we were in a downtrend, right? So when you're in a downtrend, there's your uptrend line. There's your break. There's your continuation. Here's your reversal when we broke the previous swing high and then came down, put in a higher low. As a feedback, I took the workshop. It was great and very helpful. Can recommend it. Thanks, Wolfgang. Glad you liked it. Just send an email to support or send an email to me. Oh, you want to see the 240? You want to see a 240-minute pound Aussie? Again, valuecharts.com/naked. This is what you're getting in that workshop. Again, you're going to get high, low, and low, high reversals. You're going to get high probability channel breakouts. You're going to get trends and micro trends, how to skip the false signals, consolidation patterns, where are they more likely to break, entering on second breaks, when's the market running stops, why indicators are clouding your judgment, and a whole lot more. Okay, so make sure you get it while it's hot. There we go. This is a 240. Oh yeah, look at this. Perfect example of a 240-minute micro downtrend within context of major uptrend. There's a trend line break. There's the follow through. Perfect. You're the best thing a retail trader could ever come across. Thanks, Paul. What do you mean, Larry? Can we look at Alibaba? Yep. Alibaba is in a downtrend. Okay. We were actually watching this for trend line breaks, and it had a false break and then continued lower and still has lower lows and lower highs, so it's still downtrend. You would have been shifting. When we started saying it was back in a downtrend, was as of over here when we broke through this low here, because we had put in a lower low, lower high, lower low, lower high, lower low, lower high, lower low, and we just continued to cruise on down. What about Apple? How do you get the 1 month trial for $7? Go to valuecharts.com/go. Here's the link, valuecharts.com/go. If you've already taken a 1 month trial before, you go to do it again, Min's just going to go in there and cancel it for you. So don't try to take advantage of the system. But yeah, it's valuecharts.com/go. Would love to have you join us. Apple had a hanging man on Friday. That's interesting. But here, micro downtrend, there's your break, pull back, and then continuation. Micro downtrend, there's your break, continuation. This whole time you've been in an uptrend. Pretty simple stuff. Again, when you look at it, when you step back and read the chart, it's really easy to see. One problem most people have, they sit there and they trade like this. Well, when you're trading like this, you have no idea where the market's at in context of, or within the context of what's happened in the past. This is way too close to the chart to see. You need to have your chart pulled back enough that you can actually see what's going on. The workshop was like 3 hours long, I think. You're welcome, Justo. IBM. Sure. IBM's still in a downtrend. Still lower highs, lower lows. If you were in the trading room, we called this consolidation pattern out, and you'll learn this in the Naked Trading Workshop. This was your short. I mean, perfect. It did exactly what it was supposed to do. Exactly what it was supposed to do. You'll see the S&P. Oops. There's the S&P. Man, I got lines going everywhere in the S&P. Can you tell we talk about the S&P a lot? S&P was in consolidation. If you were in the trading room, you know we talked about this 50 times. Go follow me on Twitter. You would have seen us talking about this as well. There's your trend line. There's your break. We said the target was 2090. And we're at 29,350 right now. So either way, you would have hit the target. Same thing goes for the NASDAQ. There's your trend lines. Micro downtrend within context of major uptrend. There's your trend lines. We said the target was 43, which you blew through that, obviously, as you know. But perfectly fine with me. You trade according to the chart that you're looking at. Thanks a lot, Tom. But now you have to have a great Valentine's Day. Seal of King, you're welcome. Thank you. Do I trade on a 240-minute chart? Absolutely, 100%, Pref. You want to know why? I love 240s. 240-minute charts are one of my favorite time frames. Look at what the S&P does here. Okay, here's your trend line. There's your break. There's your retest. There's your break. There's your retest. And then you go over here. This is so much fun. There's your trend line. There's your break. There's your retest. And then you're looking at, here's your trend line. There's your break. There's your retest. And then here's your trend line. There's your break. There's your retest. Pretty simple stuff, huh? Funny how a market repeats itself. And then you can go over here and you look at this. Here's a trend line. There's a break. There's a retest. There's continuation. I mean, 240-minute charts are so good for trend lines. One of my very favorite. Because those, if you're trading 240-minute trend line breaks, you're normally getting a trade that lasts a day or two. So you're normally looking for moves of $2,000 or $3,000. Joel, you have to have a set of rules and you have to stick to them. Liz says she's already claimed me as a special mentor. You want to look at Microsoft. 240-minute charts, by the way, are for futures markets, not for equities. Stick with the daily if you're looking at equities. Microsoft. Ooh. Well, looking like you're in a downtrend right now. You would have had a micro downtrend, okay? So we would have been looking at this as a micro downtrend and looking for the trend line break, which never happened. It just gapped down. Now we have a lower low compared to the previous major swing low. So now we're looking for a lower high. I now use only your naked trading, MQ momentum, and momentum trender. Yeah, Lee, that's how I do it too. Yeah, Joel, like I said, you have to have rules, and you have to follow the rules. Now look at Amazon. Sure. Amazon hit our targets from the other day. Great job, by the way, for those of you that took the longs in Amazon. One, you had an inverted head and shoulders here. You had a low-high reversal for those of you that already took the workshop. And then remember, if you go look on Twitter, just the other day, I said it should get to 83. And what do we do? Right to 83. We said it was a buy right here. So far, it worked out perfectly. Again, valuecharts.com/naked if you want the replay. Like I said, I think it's worth it. Everybody, actually, I should everybody, not most people, everybody I've talked to has said it's worth it. No, Gabe, I do not trade the same way as Dave. TWTR, sure. Twitter is a buy. It looks bullish to me. Why? Because we're breaking through this major trend line here. We snapped out of the consolidation over here, snapped up to the upside. Now we're breaking through a major downtrend line. Now, ultimately, this is still a major swing lower lows, lower highs. We just put in a higher low here. Okay, so it's not going to reverse trend completely until we get all the way up and get above this high, but this is the start. It's looking bullish. BBBY. Blackberry. What do you have here? Well, you had a trend line break, or you can be looking for a trend line break. Either way, you're in an uptrend right now. This is a micro downtrend, and we're looking for a continuation to the upside. We do not want to see a break of this trend line here, or this trend line here. HMC. HMC been in a downtrend. Kind of interesting though, because we've put in a higher low and a higher high now, so we could be arguing that we're back in an uptrend. We don't want to see it break this trend line. If it's going to stay in an uptrend, it should stay above this trend line. But you can see, I mean, look at this is actually a really good one. Look at all the micro trends you had here. That one's perfect. That one right there would have been perfectly fine as well. So would this one right here. Perfectly fine. So would this one right here. Perfectly fine. Now the problem, the one thing I don't like about this is that it's gappy all over the place. I don't like gappy markets. Oh, MasterCard. MasterCard just broke out. Micro downtrend, we just broke the trend line. So we should see MasterCard continue to climb. Look at that. That would have been... See, this is what I mean when I say it gaps just above the trend line. It's okay to take it long. That would have been money. That would have been a perfect trade. Chipotle. Yeah, Gabe. It should be. Chipotle. We were talking about this as consolidating up top, but the thing that we're watching here is this trend line right here. And if you draw it on the weeklies, if Chipotle breaks this trend line, it should go lower. Until then, though, it's still in an uptrend. Jazz. Look at that head and shoulders. Perfect. Jazz, micro downtrend. Draw your trend line across the highs. If it breaks the trend line, you're resuming the uptrend. If you want to be a little bit more aggressive, you draw a trend line just like this. And if it breaks that high, then you get long. Silver Wheaton. SLW. Actually, this is looking like it's back in an uptrend here. You have a micro downtrend right now. You'd be looking either at that trend line there, or if you want more aggressive, you'd be looking at this trend line here, which just was broken, which would technically be a long. What you do not want to see, this trend line be broken. It needs to stay above that trend line. If it's going to continue to climb, it should stay above that trend line. That's looking bullish, as long as we don't break this trend line. All right, everybody. That's going to be about it for today. I hope you guys enjoyed it. Hopefully you learned something. Don't forget, valuecharts.com/naked. This is the Naked Trading Workshop. You will learn a ton about price action. Okay, you're going to learn a lot about reading charts. It's the basis for everything we do in the trading room. Okay, it's the basis for all the trading we do. You need to understand what a market price action is telling you, and that's what this workshop's about. I hope you have a great weekend. Have a great Valentine's Day. I will see you in the trading room, or I will see you on Monday for the weekly outlook session if you are a gold or platinum member at Value Charts. See you on Monday for the weekly outlook session Monday night. Have a good weekend. See you on Tuesday for the trading room. And until next time, happy trading.